Okay, I do real quickly want to touch on title insurance. It's very interesting, and I think in some ways a little bit of a shaky insurance. Now, in class, it sounded like I lost the debate, at least the majority of the class. I lost the debate on Part B and C of auto insurance. I don't buy it. Sounds like most of you think there's an argument for it, mainly because of the pain and suffering compensation. There's a few other arguments, but that's fine. Maybe I'll have better luck with the argument here. You can see this could be something for a paper 2 article. I'm not sure how much there is out there. You can see uh, here's this person, Scott Wilson, has written about it. I could not find his article. Um, they reference his article in this interview, but I could not find it online. But it might be an interesting article. It might be a long enough article to make a paper 2 discussion, but I couldn't find it. But if you find it, let me know. I'll look for it some more and see if I can find it. But this is an interview of a guy, Scott Wilson, who wrote an article talking about the problems with title insurance. um, and so he's been interviewed by this person, Tess, and talking about title insurance. Everybody has it, has to have it if you buy a house, but what does it actually do? So the Los Angeles Times reported Scott Wilson, he wrote that's an easy way to rip off homeowners. So you can already see his perspective and biases here. So he says title insurance is a product that is designed to protect home buyers and lenders. I mean, who actually is protected better here, home buyers or mortgage lenders, but it's really protecting both of them if there's a problem or dispute over ownership of the property. Title insurance will pay the legal fees and compensate you if there's any problem. I have seen some cases. There's a really interesting uh, video TV program on YouTube about a family that in good faith bought a house and discovered that it had a lien on it and they lost the house. It didn't appear that they had good title insurance. So there certainly are claims out there. There are people who do lose money on that. My guess is most of you cannot think of anyone that's ever happened to, but it'd be interesting if you have seen that. Boy, I'd be interested to hear that in your paper if you pick that as your topic. So it's part of every real estate transaction. And what really irritates me is you also pay for it again every time you refinance. That part I just don't understand. Is if I decide to refinance my debt 4 years into the loan, why do I need a new title insurance search? Why isn't the title insurance when I originally bought the house still covering me? That just does not make sense to me. It just seems really ridiculous, and it's expensive. We're talking several $100s here. Um, so what are you covered for? What could go wrong? So you're talking about title defects. The previous owner didn't pay their taxes, or there was some lien placed on the title. There can be conflicting wills, so who really actually owns the house? So someone heir that was missing suddenly shows up and says, "Hey, I have ownership in this house." Um, so there are things out there that can happen. They are very rare, but they do happen. So here's the thing one of the other things that really bothers me with title insurance. With auto and home insurance, you'll typically get 70% of your money back through claims. So if you pay $100 in premiums, $70 of that will come back on average to the policyholders in claims. That's the loss ratio. You can think of that as the 70% as the loss ratio. It ignores loss adjustment expenses and underwriting expenses. It's just the loss ratio. And that may not all go back directly to the policyholder. Some of it might go to a body shop. Some of it might cover legal fees, but it's all to the benefit of the policyholder. 70%. In title insurance, it's only 5%. I'll show you this. Oh, well, boy, I have to show you old data later in the class because I don't have access to the Bloomberg terminals right now. But I'll show you some title insurers, and you'll see just how ridiculously low their payout ratio is. Remember the combined ratio. The combined ratio for auto insurance is usually 70% in claims, maybe 20% in expenses, and 5% for profit, or 25% I'm sorry, 70% in claims, 25% in expenses, and 5% profit. So you have a combined ratio of 95. These companies, their loss ratio is only 5%. So everything else is covering expenses and profit. It's an incredibly low loss ratio business. Um, so Wilson says the problem is you're paying too much. Maybe as much as 50 to 75%. I think it might even be higher than that. I'll talk to you my view of this when we get to the solutions he talks about. One of the reasons this insurance is so expensive is kickbacks. You don't buy this insurance directly from the title insurer. You're buying it either you're getting it through your mortgage company, or you're getting it through your real estate agent, or you're getting it through the builder. You're getting it indirectly. And if this group of people is getting some kind of kickback from the title insurance company, then that's obviously going to be covered in part of your costs. It's illegal, but it's widespread, and the consumer ends up paying for those kickbacks. He gives you a list of what some of those kickbacks can be. But yeah, he'll talk a little bit later, like if you try to go out and shop for your own title insurance, these three groups might not like that at all because of the relationship they have with the title insurance. So the consumer rarely chooses their own title insurance company. If you're buying an existing house, you're probably going to get it from your agent. If you're refinancing, you'll get it from your lender. If you're building a new house, you get it from your builder. And most people don't think about it. It's just part of the transaction. I remember with my real estate agent going through this, I remember asking them what, and I think mine was $500 and something. It's like, what is this paying for? Do I really need this? I didn't think about going out and shopping. It was only $500 for me because I bought a fairly modest condo. But you can see when you get up to more expensive houses, the premium is based as a percentage of the house price. So if you get up into $400,000 or $500,000, $600,000 houses, the title insurance is going to be several $1,000s. So shopping around could actually help you. In my case, $500. I was thinking if I shop around, what I'm going to save $100, and I'm going to spend 7 hours doing it. It's just not. It wasn't worth my time. So federal law actually gives you the right to choose your own title insurance companies. You don't have to take the one that they propose to you, but they'll definitely try to pressure you. I think your agent especially will pressure you because they've got their process. They're in a hurry. They want to get this done. Whether there's kickbacks or not, they just want to get it done. If you're going to shop for your own, it's just another step in the process that they got to handle, and they want to get on to their next real estate deal. So you can shop around. He gives an example here of a husband and wife shopped around. They saved more than $1,000, but they had to stand up to the real estate agent because that agent, she wanted them to go with her company. How much do the rates vary across the country? So a $500,000 property in California, you could pay $1,000 to $2,000. In Iowa, it might be, well, he says 150, but Wilson corrects him and says it's probably be about 500. So 1,000 to 2,000 versus 500, you're talking half, a third, a quarter cheaper price. Iowa has their own state-run program, so there are no kickbacks. You don't have any choice. It's the government monopoly. I don't usually like that as a solution, but in this industry, it looks like there is definitely some anti-competitive things going on in most states. So Iowa seems like they may have a better deal than what's the typical approach. So why don't we fix it? Why can't we change this? Well, it's a politically entrenched system. The title insurance companies have a lot of power. They control the process. They control the laws. I think there's some title insurance companies that are actually legislators. And here's my solution is why don't we just let State Farm and Allstate and USAA sell this? Farmers, they're not allowed to, by law, to get into this business. Now, one thing I wish I could go back to USAA and ask the lawyers and actuaries, why doesn't USAA fight this for their customers? USAA is a company that, at least in the past, I don't know how they are today, but in the past, they could send out an email or a letter to their membership and say, we need you to write your congressman, your congresswoman on this issue. And man, USAA's customers were loyal, dedicated. They did it. an incredible power. But why USA didn't do that? Maybe USA just didn't care. It wasn't that big of a business. I don't know. But just thinking the benefit they could do for their policyholders, I'm just curious why USA and State Farm and Allstate haven't tried to get the laws changed and haven't fought this. I mean, what argument can the title insurers make where it's insurance companies that are, State Farm, Allstate, USA? It's just more competition. If it's not a good deal, if they're not getting a good price, then they'll just go to the title insurers. So the only people being hurt with the competition would be the existing oligopoly that's in place. So what are the options? One is the state-run model. That would rarely be my solution, but that is one. Another option is you just have the mortgage companies make title insurance just part of the process. It's just thrown in, and in fact, there's been some studies that some of this mortgage insurance that we do, it would be cheaper just to not insure it at all and just charge 5-6 extra basis points for mortgages. That this is such a small cost that the average borrower would never notice it. The lenders could handle it by just charging a little extra for their loans, and it would essentially, the whole industry would disappear. Or you have the lenders actually charge for it, and they bring their buying power in the force with the title insurers. I'm in the third option. Let's let State Farm, Allstate, USAA, Farmers, let's let them handle it. And my guess would be it would almost be almost unnoticeable. That I would not even sure that they would sell title insurance as a separate policy. That it might just be incorporated as part of the homeowner's insurance policy. Obviously, if someone's buying or selling a house, that risk goes up, but the risk is still there 3, 4, 5 years after you buy your house. So it is certainly going to be a little higher right when you buy the house, because it's more likely someone's going to notice the transaction and step in. But it's still there the whole time, so to me it seems like it could just be part of the homeowners. That's what I'd want to hear from the actuaries. If title insurance was just thrown in as part of homeowners, maybe it's separately looked at like homeowners breaks up between property and liability. So maybe the insurance company views it separately and breaks it out in their analysis. But to the homeowner, they're just buying homeowners insurance. It's just part of the overall package. They don't really notice it. That to me, depending on the pricing, especially if the pricing comes down 80-90%, seems like it's a much better deal for the consumer. So again, why isn't this happening? It's, there's a theory that Kahneman has come up with, the loss aversion versus risk seeking, that we're loss averse in gain situations and we're aggressive in loss situations. And so the people who have something to lose, which are the title insurers, they're going to fight much more aggressively to keep what they have. The insurance companies are going to fight to try to get this business. I almost want to start a grassroots effort. Once I can talk to the actuaries and actually get the numbers and see what's going on, a grassroots effort to completely destroy this industry and just have it taken over by the existing insurers, if the math makes sense. I don't have the math, so I can't say for sure that's the case. But just my gut tells me title insurance rates would drop at least by half, if not much more. If the payout ratio is 5%, now up here, the argument was the reason they pay out so little is that the title insurers say, well, we're doing all this time searching, making sure there's no problems with the property. I don't remember any of that happening when I bought my property. Maybe it was such an inexpensive property, I don't remember any of that happening. But making sure the title was clear and all that. Maybe there's some of that going on, but boy, I just can't imagine that's not something that a State Farm or Allstate couldn't essentially merge into their existing business without an enormous amount of extra workload. But I don't know. I don't know the business well enough. The main thing, my concern is we need to have competition. It should be the law. The main thing is the law should not say State Farm and Allstate cannot be in this business. I can't think of any logical reason for consumers to not allow reputable firms like Allstate and State Farm to actually be in this business. So if you did this for paper 2, what I'd really encourage you to do is look at the issues and what exactly do these laws say. And is it all 50 states or is it all 49 states other than Iowa? Do title insurers really have that much power that every single state in the United States disallows large personal lines riders that sell? And what is the argument? What's the background? What's the history on that? I would love to know that. If no one does their paper 2 on that, then I might this summer do it. I'm really interested in this topic. I'm not sure what's out there, so you might want to check and see. You might start with this person's article um, and see if you can find it. Los Angeles Times. I don't have a date on any of this, so you have to click on it and see how far back he wrote this. It might be tough to find. But anyway, I think it's a very interesting topic, and I hope one of y'all will do it as a paper. All right, so we've talked about everything related to all the policies. We've gotten through all of them, even added title insurance, everything but farmers insurance, and maybe one of these classes, one of these years, I'll add farmers insurance in there, but crop insurance. Hopefully you have a good sense of what this industry does. I'll show you some numbers later so you can see loss ratios between an auto insurance rider, a homeowner rider, a title insurer, a reinsurer. It's interesting with reinsurance, their loss ratios are also very low. It looks like they're making a lot of money, but that's 4 out of 5 years. So they have great years, 4 out of 5 years, and then suddenly a really horrible year. And so you can really understand these businesses by looking at the numbers over time. So even though I can't update these numbers because I don't have access to Bloomberg, I'll see if I can get in and update the numbers so you can see what 2019 was like. I think even if I can only go through 2018, I think just seeing these loss ratios by different types of riders is very interesting. So where are we going next? So our last session in this class, we're going to start on the pricing side, and we're going to spend a few classes on the pricing side. You'll see how I do it in the exam. It's going to be really tough on the exam for me to do this on the exam. So I'm not sure how I'm going to do it on the exam. Yeah, in fact, that just hit me right now. So yeah, it's going to be interesting. So we'll have to see exactly how to do that. Maybe I'll have you, instead of doing the math problem, I'll have you write an essay on it. The problem with that is this is the only math question on the second exam, and I want you to have a math question. So maybe you do a math question, but you have to write you have to explain what you're doing. So we make it more of an essay and a math question at the same time, because the math is going to be too easy. Because if this is open notes, I mean, it's just you just plug in the numbers and the answer comes up and you've got it. So we'll figure that out. I just thought of that just now. So our last session of this class will be an introduction to the pricing side. We'll talk about it from the life insurance industry versus the P&C insurance industry. I'll give you some of the background. I have a lot of experience with the pricing side of P&C insurance because of my role working with the actuaries on it. So I'll give you quite a bit of background. And we'll reference back again to what Warren Buffett said about float, because it really fits into that category. All right, so we'll stop it there, and then next session we'll get started on pricing.